We are aware of the gravity of the situation when we discuss Coinbase. The crypto market is now insane. The bulls and bears are engaged in a fierce tug of battle. The timing of the recently authorized Ethereum ETF couldn't be worse. Investors in Shiba Inu sound the alarm. Things are getting crazy. It seems that there is just one method to rescue your assets when they panic. However, what is the topic? Okay, let me clarify. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the curve in the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. The price performance of Shiba Inu has not been optimistic recently. The resource has had a lot of difficulty maintaining its position above the local support threshold. The whale exodus emphasizes this decline and suggests that the market isn't yet ready for a boom period. The Shiba Inu community, which had been hoping for improvement, is devastated by this news. A recent development that has greatly excited the cryptocurrency market is the approval of an Ethereum ETF, which has further complicated the issue. This excitement was warranted since the ETF's acceptance represented a noteworthy achievement. Remarkably, whales' interest in Shiba Inu also increased as a result of this boom, and they even tried to drive up the breed's price. Shiba Inu has, however, found it difficult to sustain pace despite this brief boost, underscoring the difficulties it confronts in the present market environment. Strong selling pressure has lately caused the price of Shiba Inu to drop below important support levels. This decrease demonstrates how it was unable to hold onto its position above a crucial cutoff. Large transactions have noticeably decreased concurrently, suggesting a decline in activity by significant holdings. The commercial presence of Shiba Inu is presented in a problematic light by this mix of elements. For example, in the previous week, there were 341 significant transactions, while on the last day, there were just 82. This steep decline implies that large investors, or whales, are cutting down on their holdings, which will lessen the purchasing pressure required to keep prices high. Even while there are still 82 major transactions, it's still 4 times less than at the peak. This decline is quite apparent. It's like seeing a street with a modest number of people instead of one that is busy and full of people. It is difficult to overlook the substantial difference. In addition, there have been 3.36 trillion Shiba Inu in big transactions over the last 24 hours, down from a high of 5.7 trillion Shiba Inu during the previous week. This signals that major holders' activity has somewhat subsided, but negative pressure on the market is still present. This is a very intriguing advancement. The Ethereum ETF was authorized only 2 days ago, which ought to have excited investors. So, where's that thrill these days? Why, in spite of this encouraging news, did the price of Shiba Inu suddenly collapse? This is a perplexing development. However, this is a really decent description of what's going on right now and what's coming up. Despite the approval of Ethereum ETFs, trading has not yet begun. There are several phases in this procedure, one of which is configuring the ETF, making sure rules are followed and getting the market infrastructure ready for trade. The market won't fully react to the ETF approval until these preparations are finished and trading is authorized. This might help to explain why Shiba Inu's enthusiasm hasn't resulted in any quick price movement in the positive. This is, of course, what a lot of people were thinking, but they appear to be missing something crucial. Recall Grayscale, if you can. Following the approval of the Bitcoin ETF, it was they who dumped hundreds of millions of dollars worth of Bitcoin, triggering many market collapses. This is an analysis. Investors in Grayscale might purchase Bitcoin for less in the early months of 2023, with the discount often ranging from 48% to 50%. As soon as Grayscale's Bitcoin was turned into an ETF, a lot of investors sold their holdings due to this substantial discount. However, investors were able to purchase Ethereum at a far greater discount, nearly 60% in early 2023, thanks to the Ethereum ETF. When ETF trading opens, a lot of Ethereum ETF investors are probably going to sell and benefit from this significant discount. The explanation is simple. They find buying at a discount to be a very appealing alternative, since it allows them to sell at market value and lock in significant returns. This might indicate that whales are holding off on making investments because they think prices will continue to decline. And that's just the very beginning. In Hong Kong, where Bitcoin and Ethereum ETFs are already traded, the variations in flow patterns are evident. This strategy is clever because it enables us to forecast future trends by analyzing current data. While Ethereum ETFs have only received total inflows of $17 million, Hong Kong Bitcoin ETFs have experienced total inflows of $105 million. That represents just around 16% of Bitcoin flows. Additionally, there is $10 billion in open interest on Bitcoin, but just $1 billion on Ethereum on the largest derivatives marketplace for US investors. It translates to only 11% on Ethereum. Ethereum has percent of the interest, suggesting that most investors are more interested in Bitcoin than Ethereum. This discrepancy shows that while there were huge hopes that Ethereum will reach Bitcoin's volume, the reality is far different. This discrepancy may be the cause of the ongoing price declines and the lack of interest from whales. Would you engage in a market when the actual performance is so much below expectations if you were a whale? It is illogical. This cautious approach may be the reason for significant holders' present lack of investment. However, Shiba Inu's situation has been significantly complicated by more than simply the startling revelation of the Ethereum ETF. There's more to it, and Coinbase is involved. The introduction of Shiba Inu futures by Coinbase for its institutional customers outside of the US was recently announced. People went crazy over this revelation since they thought Coinbase already had this functionality. Coinbase seems to have been preventing some of its customers from using certain services, however. Following this finding, several people began disparaging Coinbase. To put it in context, consider that after utilizing a service for some time, you assume you have access to all of its features. You feel excluded or unjustly treated when you unexpectedly discover that some functions were exclusively accessible to certain people. People who feel misled or left out of things they believed were available to all users seem to be upset about this finding. It makes people angry and disappointed because it calls into question the fairness and openness of how sites like Coinbase function. Furthermore, Coinbase probably banned this functionality because of regulatory concerns. Regulators often place limits on leveraged trading to shield consumers from any damage. This is because leveraged trading, particularly in the cryptocurrency market, may present serious dangers to investors. Coinbase could be abiding by legal requirements to maintain compliance and reduce hazards related to high-risk trading activities by restricting access to leveraged trading tools. And here is where the dispute heats up. It's interesting to note that although authorities ban leveraged trading, they sometimes permit activities like gambling that may be seen as dangerous or speculative. This disparity calls into question risk perceptions and regulatory objectives. Leveraged trading, according to some, is speculative and may result in large losses of money, much like gambling. Leveraged trading, on the other hand, takes place in financial markets and, unlike gambling, may have wider economic ramifications than just the losses of individual investors. Some may find it incomprehensible that authorities allow gambling but prohibit leveraged trading from an ethical perspective. They can argue that both pursuits include a high degree of risk-taking and have the potential to be detrimental to both people and society at large. This inconsistent approach to regulation may be seen as unethical as it favors certain activities over others without providing a clear rationale or taking into account any possible repercussions. Shiba Inu's volume increased by 51% once it was announced that Coinbase was approving this new functionality. This considerable rise suggests that trade in Shiba Inu has increased significantly. But with the general uncertainty in the market that has followed the Ethereum ETF scenario, some people could be feeling overburdened and unclear on what to anticipate going forward. People may become fearful and reluctant to trade as a result of this uncertainty, choosing instead to pull back and wait for more certain signs before making new investments. However, what are your thoughts about that? Please leave a comment below. I look forward to reading your thoughts. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.